Hi everybody and welcome to week 8 of autumn session 2021 at UTS. My name is Dr. Amanda White and today I have a special guest. Nelson is off on some sick leave and I have a Nelson adjacent replacement here in terms of Michael. So Michael, why don't you introduce yourself?
Cool, thanks Amanda. Thanks for having me. I respect the work that you do, and I think, in terms of the accounting kind of shows that you do, I think it's really helpful. I think my name's Michael Lee. I'm currently an investment analyst at Antipodes Partners. So we're basically a $9 billion fund manager, primarily investing in global equities across the world. We're a hedge fund in the sense that we can hedge tail and currency risk events. So that's kind of where the hedge word comes in. So that's what we do. There's a 25-man investment team, and for me specifically, I cover European and US software companies. But I didn't study at UTS. I studied at UNSW.
That's okay. That's
unfortunately.
All right. That's all right.
But I think I respect the work enough to come on.
Awesome. Michael made a comment because we were talking about valuation one week, and we looked at Afterpay, and Afterpay is generating no operating cash flow.
Yeah.
But is obviously getting a lot of money through external financing, and we asked the question about how long could you go on, doing this, and what the impact of valuation is. And so this is your work.
Yeah.
In terms of, is it just listed companies, or you're looking at companies that IPO as well?
We can look at both. So primarily we're invested in like mid to large cap companies, so generally above $2 to $3 billion.
$2 to $3 billion.
In market capitalization. Yeah, just for definition's sake. But we also can look at IPOs, or initial public offerings, so companies that are going into the market for the very first time publicly. We do look at those, but generally we stick to those mid to large cap companies.
Awesome.
Yeah.
Now, how did you get into this role? Because everybody thinks analyst sounds very glamorous, and I know lots of students say, I want to be in finance.
Right.
Is it glamorous?
I think it's definitely not as glamorous as
TV makes it.
As Billions or Wolf of Wall Street, if you've ever seen any of those TV shows. But I would say it's glamorous in the sense that there aren't many jobs that I found in industries out there that really require you to kind of eat your own cooking. I think funds management is one of those industries where I guess you have to put your money where your mouth is, in terms of when you've done your homework on a certain stock. Could be Afterpay, could be Amazon or Facebook, and you decide you like it and you want to back it. You have to put your money, or your client's money.
You have to invest your client's money in there.
Behind it, and I suppose that's the academic rigor or the intellectual stimulation that I get from this work, which in some ways is glamorous, but it's not maybe as glamorous as like the fashion designing that my mum does.
Oh wow, that's awesome.
So, yeah.
And so what did you study at university? So you went to UNSW.
Yeah, I studied Bachelor of Commerce. Didn't do honours, but sometimes I wish I did.
And what major did you do?
Majored in accounting and finance.
Accounting and finance. Okay, all right. And so, do you think it's possible to do these finance analyst jobs without knowing about accounting?
I would say yes, because I think if you ever go to a lot of different fund managers, we all look for different things. But I could say, at least from Antipodes' point of view, I think we care more about a passion for investing. And I think, what does that look like? It's really about like whether you have your own personal portfolio that you're already managing, and you can already talk about your winners and losers, which is quite nichey, but not every student does that. But we tend to look for that because that's a leading indicator of longer term passion, hopefully. But we also, I think, like the idea of people who just love intellectual stimulation, and at the same time have a curiosity to know what the truth is.
And that's, for all those people who might be doing an accounting major as well, I guess audit comes into there of, do you ever have a situation where you look at some numbers and say, I don't know if this is right?
Yeah, many times.
Oh, okay.
Obviously in US and European software world, I like to think that the corporate governance is generally better than, dare I say, some Asian countries out there. I'm not going to name names, but you can,
Well, look, if we look at a world corruption index, that Asian countries are quite up there, and it's more part of their everyday. I once had a student write to me, and she was auditing, I think it was a big hotel chain throughout Southeast Asia, and she said, Amanda, there's bribes.
Yeah.
What do I do about the bribes? Like they're trying to create an account for bribes. I'm pretty sure I can't have that under international financial reporting standards. I said no.
You can't.
But she said like they just talk about it like it's an everyday
phenomenon.
It's just get out of a parking ticket, pay a bribe. Need to expedite a permit for something, pay a bribe. So what do you do when you have information and you think, I don't know if this is telling me what's really going on?
Yeah, it's a good question. I think from Antipodes' point of view, at least, and personal investing point of view, I tend to stray away from companies that actually have poor corporate governance. I think that matters a lot. I know one time I think I mentioned on maybe one of your previous shows, I talked about the quality of management. That plays a big part. I think when you try to think about, well, who's actually looking after your capital, at the board level.
So how do you determine whether those are good people, bad people, trustworthy?
It's about looking at the track record of these people over time. I think, like, for example, like I know there's certain CEOs that they'll say a lot of things, but then you would have to go back and look at whether those things have actually materialized, which they've said. A lot of them like to talk about stuff at strategy days for the next 5 years.
So you get to go to, so obviously they have events for people in your industry where they talk about things that are different than what they might say in the normal press.
Mm-hmm. Yeah, it's we call them industry conferences. Typically it's the investment banks that usually are responsible for managing those, and sometimes I'll fly to America or I'll fly to Europe to kind of meet a lot of different companies at once.
Not right now, I presume.
Not right now because of COVID. I was actually meant to fly to the US last year, but unfortunately that got cancelled, so I'm still never.
You've got a flight
US.
credit, like the rest of us.
Yeah, exactly. But 2 years ago, I did get to go to Hong Kong because of that. Meeting some companies over there through JP Morgan, so that was really exciting.
Wow. So the company, whatever it might be, has an investment bank that organizes all of this. And so does everybody get to go, or is there some information asymmetry where perhaps some analysts get information that others don't?
I would say, I think from an institutional level, definitely we do have access to information that retail investors don't have, so like your mum and dad investors. In the sense that, yes, you could probably ask more questions with the management teams that you're looking at that my mum and dad can't. So
Can't
you
put
could
your hand
argue,
up at a shareholders meeting and
because you could argue that maybe there's some asymmetry there, but I would argue that there are actually benefits of being a retail investor that you wouldn't have as an institutional investor.
Oh, okay. What would be those benefits?
I would say certainly there's a book that I've read from a time ago, which was Peter Lynch. He was a great fund manager at Fidelity, and he wrote a book called One Up on Wall Street back in the 1990s.
I'll pop a link to that in the description.
Yeah, sure. And he talked about the retail investor's edge being the fact that in the industries that you're working in, you actually see those industries firsthand. So let's say my mum was a fashion designer at Gap, which she was.
Wow.
She actually looked at she was working every day in the clothing industry, and so she would have seen probably which companies were doing well, which companies were doing poorly, and that's actually a better edge than someone like me going as an analyst looking at the same sector. And I wouldn't have the same information of
because she's immersed in it every single day.
Yeah.
Okay. And so when it comes to accounting information, what accounting information do you look at? Because we have lots of research. There's we have an entire area built on research into capital markets and that it's supposed to be providing value. So from an analyst perspective, what gives you value in accounting information?
There's definitely quite a lot of frameworks, both I think rule of thumbs I've learned from my mentors over the year, but also academic research that I've kind of relied on to actually do my analysis of investing. I mean, we'll give you an example of each. I think rule of thumb from my mentor, who's 65 years old, he's fairly old, but he's very simple. I think he thinks about just the financial health of the business, and so he'll look at
going back to fundamentals, right?
Correct. Yeah, he looks at the balance sheets.
Does his ratio analysis?
Correct.
Okay, all right. So there is value for ratio analysis for all the
so from current ratios to quick ratios, we look at those. And it really depends on the company. Like if it was a retailer, then I think the days on inventory matter a lot, and whether that's increasing, which is probably a bad thing, or if it's decreasing, that's probably a good thing. And inventory reserve levels, if it was a retailer, and like whether the company's in net cash or net debt position, we worry about those things. And particularly for, I think, more mature companies or younger, more skewed to the younger type companies who, I suppose, are still in that phase of paying down debt. You obviously want to see whether they can meet those
paying down debt over time.
Commitments over time.
Yeah.
And you usually look at that through looking at the free cash flow that they're generating. So like
you have to work backwards, right?
Yeah, so less capex.
Okay. And so that's where some of the research comes in?
Yeah, and I suppose that's kind of like, these are more back of envelope, rule of thumb type, quick analysis you can do in less than a minute. Okay. In my view. But academic research, for example, one thing that I've seemed to appreciate was I had a lecturer, Ka-Ming Chong from UNSW.
Oh yes,
who
I
I'm
know
not sure if
Ka-Ming.
you know, but
yes.
I'm actually meeting up with him later. But
awesome.
Yeah, he taught me economic value add. So this was something that I think was actually from McKinsey, but I think there's been a lot of academic research done on it. And I only knew about EVA from Ka-Ming, and it's really this idea of trying to figure out what the economic profit of a business is less the cost of capital. And so whatever excess is remaining is kind of the value added economic profit or the excess profit above above cost of capital.
Yep.
That's another way you can think about it. And I learned that from him. And funnily enough, I actually sometimes use that when I'm thinking about different companies. Not all companies work. If you look at a bank, it won't necessarily work.
No.
But like a typical retailer could work, or a Woolworths, or a Coles, or Costco. Yeah.
So now that I'm coming from the audit perspective, do you ever look at the audit report?
I do. Before I was a analyst at Antipodes Partners, I worked as a cadet in a former life at Deloitte for 3 years. So I was in the audit team.
So you've seen the other side.
I have seen the other side. So that's why I have a soft spot for auditors. I really do. And I think if I wasn't doing investing, I'd do auditing, frankly, because I actually really enjoy it too. But yeah, I actually do look at the audit opinion. That tends to happen more for the Asian companies. We go straight there when we get the report, just purely because they have a section where they flag significant matters.
Yes.
And that generally is a good idea of like telling you where to look specifically more carefully. I think the tendency that I've seen, at least with Chinese companies, is business combinations. So when you have a company buying another company, they have to obviously account for goodwill. If the value of the purchase price is above the fair value of the net assets. So I think when you think about that, there's a lot of financial gimmicks that can go on in terms of accounting goodwill.
Or impairment of goodwill.
Correct, yeah. and a lot of times companies over time actually write it off, and actually there was actually no value to begin with. So that basically is another way of saying, oh, sorry, we've actually overpaid for this business and it's actually worth nothing.
Oh gosh, well you hope you don't get in that situation where
the audit opinions matter.
Well, that's good to know. It's good to know. And so it's great that you're looking at some of the accounting information, plus you're using all these other tools. So if students want to get into this area, you mentioned that one of the things is a passion for investing and having your own portfolio. Is there anything else, any other characteristics or things that might suit certain people for this industry?
I think it's as well. I think there is some technical flair that you need in this industry.
So do you use Excel?
Yeah, you do have to use Excel, unfortunately. But I think if you have coding skills, I think that's also very attractive to fund managers like us.
So can you code?
Unfortunately, no. I can do a bit of R and a bit of VBA, but that's about it.
All right. And is there specific languages that you see are being used more often?
Yeah, with our quant team in the fund, where there's about 3 people. One of them has a PhD in computer science, but you obviously don't need that level. But a lot of them typically use Java and R. That tends to be those two, the
Okay.
main two languages.
And so
they-
the good thing
they
about
use.
R is that R is an open source, publicly available statistics tool, which I know a lot of psychologists actually use as well,
Yeah.
funnily enough. And there's lots of free training on how to use R out there on YouTube as well. So if it's not taught at university or wherever you are, you can go online and learn stuff free. So in the news this week, so normally we talk about news and we're sort of doing things a bit backwards today, but in the news this week, Coca Cola Amatul
Right.
has shareholders of the Australian arm, I believe, have agreed that they're going to sell the company
To Europe.
to
business.
Europe.
Yeah.
So who actually, how many different Coca Cola companies are there?
There are. It's quite interesting because at least I don't cover it directly, but I speak to our portfolio manager who looks at Coca Cola, which incidentally is one of our holdings in the fund. So, Coca Cola. When you think about Coca Cola, there's the American parent business, and of which it's actually quite a complicated network. But underneath the Coca Cola parent in America, there's the European business. There's a separate Australian business. I think those are the only two listed businesses. And then the rest are typically either 100% owned
Subsidiaries.
subsidiaries, or they can be joint ventures in different countries. I think depending on...
Well, like in China, for
yeah.
example, it'd have to be a joint venture because you can't own,
Correct.
you can't take a whole private company into China.
Yeah, typically it's very difficult for
Yeah.
any company outside China, I think, to enter the market unless it's through a JV, a joint venture. So it's a complex network, and there are subsidiaries, there are joint ventures, and there are even listed companies underneath the parent listed company. So
Wow.
it's a complex network.
So it's a lot of trying to figure out who owns what company structures. Now, your specialization is in software.
Yeah.
So I guess this would be companies like Xero, Microsoft,
Yep.
etc. What is happening in that particular industry coming up?
I think in that industry, what's most exciting is we cover these companies every day, and if you've been following the US markets at least, a lot of those companies have their reporting seasons every quarter, in the calendar year. So now that it's March quarter ending,
This is their first 2021 results.
Correct. Yeah, it's the Q1 we call it, or first quarter. There are a lot of technology companies that are coming out with their first quarter results within the next few weeks. So, your typical, usual suspects like Amazon, Microsoft, Facebook, Google.
So I presume you get a notification, right? When some information comes out, you get a notification, and then what is it that you have to do with that?
With that information.
Is it like everyone hands on deck? Is it madness? People analyzing stuff? I don't know. I just imagine people going,
Yeah, man. I think that's what Wolf of Wall Street will make you believe.
But it's not.
But we're more like a library than anything else. So, it's very much, I think it's just like a librarian. Everyone's being very quiet and working on their own thing. But yeah, in terms of what we have to do when these kinds of earnings results are coming out is for the companies that we are responsible for, which are in the fund, those are the most important, obviously, because we want to see what the price action is and how the market's reacting to the results. So we will, like the rest of the market, go through the earnings results, read the press release, look at the financials.
Do all your calculations that you talked about earlier.
Yeah, try to update my models with all the numbers that I have. And that's probably, in my view, like a 30-minute, 1 hour job for each company.
Wow.
So yeah, it's definitely faster than maybe academic research analysis. Academic research analysis.
Years on this stuff.
Yeah, you guys might spend like I don't know, weeks or months on maybe one thing. But for us, obviously time is a valuable resource, and it's limited, and there are a lot of companies you have to get through, and so I think we have to be quite efficient about it. But I think most of us in the team have our own ways of going through.
So you update all of your models, and then is the next step advice
Correct.
to the fund manager about we should sell this, we should hold this, we should invest in more of something else.
Yeah, correct. It's like a buy, hold, sell kind of thing.
I almost failed the first finance subject.
Oh, really?
I must tell you, at university, it just didn't click in my mind, and I had a fantastic lecturer too. But finance, I just don't
really?
which is why I did accounting. But I do remember some of those initial things. And so you do that, And then what do you do after results are released, and you've gone through this flurry of updating your models and updating your advice? And if that happens every quarter, what do you do for the rest of the time?
For the rest of my time, I don't sit on the beach, but I don't. That's what Wolf of Wall Street will make you believe. But I mean, we do that's more what we call short-term work, or fast-thinking work, as our CIO Jacob Mitchell likes to call it. But we in our downtime usually spend our time on kind of longer-term thinking, and that's really more about having a view on industries that we may not know about or that we believe are going to be there in the future. So a really good example that I've been talking about is more recently is the gaming world.
Ooh.
And video gaming world.
Yep.
So that is a really exciting space where there's a lot of M&A happening at the moment. So a lot of mergers and acquisitions, and if you think more broadly, there is a lot more talk now about this idea of the metaverse, which is kind of a conglomerate of virtual worlds.
Well, especially since Microsoft is buying up gaming companies because of their platform, and my husband plays in a massive multiplayer game.
Great. Do you know what game?
Called Guild Wars 2,
which
is owned by I think ArenaNet. Something like that. I don't know. I'm not exactly a gamer. But there's lots of discussion about is this where big companies just buy up smaller companies to keep taking market share? And obviously we've seen that with a lot of tech companies, they buy a competitor or they buy something and then they just decommission it. They go like, we don't want this to compete with something else. So that's certainly something that, as students say, I want to get into gaming or I want to get into a particular market. And often I say, like, what is the long-term goal? And a lot of people say, my long-term goal is to get bought out by a big company, which is a really interesting sort of place to be in.
Becomes a lot more faceless.
Becomes a bit more, yeah, absolutely. So unicorns that are private companies, like companies like Canva, for example, which is, I don't know, is it $19 billion?
$19 billion valuation. Most recent funding round. Yeah.
Would a company like that ever go public, do you think? Given they're so valuable and they're doing so well on their own.
I think they will. I think I think my personal view, I don't know the Canva team personally, but I followed Melanie Perkins, CEO, for a while, and I have a lot of respect for her. I think what she's done is incredible. Kind of bring this idea of an Adobe but for graphics design.
Yeah.
I think that's how I think about it, and Adobe is a very big business, by the way. So she's doing something similar.
And it's for everybody. Like you don't need to be a designer, and there's all these templates. Correct. I have a pro Canva account. I must admit, I use it to build a lot of my YouTube thumbnails, to build infographics for students, for class, and it's a lot of new startups. Like I want to get bought out by someone else, and I really like that this is still a company that's going on its own. Yeah,
she's done many funding rounds, by the way. But I think throughout all those funding rounds, she still retains control. So that's incredible in itself, because you have to do a lot of negotiations.
Yeah,
with
and sometimes that can turn bad often as well, where the founder retains control, but they're not quite set up to handle
run the business
such a big business
at a different stage of the corporate life cycle, which I mentioned a while back to you, which matters. And I think they've done a great job, and I understand that they're doing a few $100 million in revenues. They're profitable. I mean, it's only a matter of time, I think, before they end up public. It just depends on which market will they be public in. Is it ASX or is it going to be New York?
It won't be us, right? Surely,
they'll do one at Atlassian, I think, is what's going to happen.
It'll need to be a bigger exchange. Awesome.
Yeah.
Well, I want to thank Michael. We only have 15 minutes on IGTV, so hopefully we've kept it under 15 minutes, because I think we could talk all day about this. But I will provide you also with Michael's LinkedIn details, so that if you want to connect with him and find out more about what he does, you can get in touch. Thank you,
Can I also
Michael.
say,
yes.
I do have a Substack blog as well that I'll give it to Amanda, and you can link it down below as well.
Cool. Awesome. Well, thank you, Michael, for coming on today, for reaching out to us in the first place and having a comment on a video. We really appreciate having that industry input. And, the more that we can bring together academics and industry, the better the students are prepared for going out into the workforce, understanding what those jobs involve, and even the idea of having your own personal portfolio.
Yeah, agreed.
That's a really interesting one. So thanks, Michael, and everybody, we'll see you all next week.
See you guys.